There's another dynamic working within the market, short interest, or stocks that investors are betting against. But as Dominic Chu tells us, these hated stocks could be part of the reason why the market has been rallying.
There are lots of ways to measure sentiment about a stock, but one way that's getting a lot of attention these days is something called short interest. Now, simply put, it looks at how much traders and investors are betting against a stock. Now, they do so by borrowing a stock to sell at current prices, hoping that they can buy it back for less sometime in the future, pay back their stock loan, and then pocket the difference. When lots of people do this type of stock borrowing, it may indicate bearish sentiment about the future of a stock. So there are currently close to 50 members of the S&P 500 large cap index that have at least 10% of their shares betting on a decline. But when a stock has fallen a lot, profits are there for short sellers if they buy that stock to repay their loans. That may be what's driving up prices for a lot of these beaten down stocks, especially in the energy and material sectors. For example, oil drilling company Transocean has gained 50% over the last week. Oil and gas producer Murphy Oil has gained around 60%, and natural gas company Chesapeake Energy has more than doubled. Each of these three companies have among the highest short interest in the entire index. Now, there's a concern that if the current rally in stocks is driven mostly by this closing of short positions instead of buying perceived value, it may not last. And there may be good reason to stay cautious about the overall market.
I think the market is worried about Europe and the threat of negative interest rates. I don't think it does anybody any good to have that. And I think that's one of the things that was driving banks down here. And then I think the market's focused on China and can they pull off that soft landing and get their growth under control, if you will.
Still others are convinced that there's bullish fuel left in the tank.
The bull market still has lots of legs because the policymakers can provide a great deal of support still. We believe this is going to be one of the longest business cycles that any of us has ever experienced. And as the business cycle progresses, the bull market would continue to rally.
Investors will be watching developments on numerous fronts, including sentiment indicators like short interest, to see if the market can continue its upside run. For Nightly Business Report, I'm Dominic Chu.